Hey there, folks. Happy Saturday to you. I hope you're having a fantastic weekend. I know if you're in one of those areas that are being hit by the winter storm, I hope you're safe. I hope you're warm, and I hope you get through it unscathed. Um, and this video hopefully will help you kill some time as you're just sitting indoors there. So, wow, what an exciting week we had last week. And I think we're coming up to a week that's even going to be more exciting. This is a huge week that's coming up, and we're set up pretty sweet heading into it. So I'm really excited about the short-term trading opportunities. Now, I know last week was a pretty doom and gloom video, looking more at a longer term, taking a longer term view of things to come. But listen, as short term traders, we kind of need to look at what's going to be happening in the near term that may give us some actionable trades and some powerful opportunities. And I really do think we have that coming up in the next week. So let's just go review a couple of things. Last week we talked about the fact that we absolutely had to have oil stop going down. Now, if you read my blog every day, you know that as we were heading into the report, I had wrote that I felt well, I didn't feel that the best case scenario would be to get a bearish report and have oil stop going down or even bounce. And that's exactly what happened. We got a bearish report, inventory report, and oil stopped going down. It actually rose on that report. And what happened? We pointed out DWTI last week saying that this thing was setting up for a potentially fantastic short opportunity. And certainly that is what happened. This thing had gone parabolic, right? We got that report, oil bounced, and DWTI crashed. Now, I want to point out and emphasize the easy money in DWTI has already been made. I'm not suggesting that DWTI cannot decline further. I think it will. I think it likely will come down into this 237 range. But, you know, look, this thing has fallen from 485 to 287 in 2 days. The easy money has been made. Okay? Not saying that you can't continue to play DWTI. I'm just saying it'll probably be a little more challenging to make money in it than it was here when it had this full-blown collapse. So be careful in DWTI and piling on at this point where it's at. Let's take a look at the action in gold real quick. The reason why I want to point this out is, you know, even though it felt as though it was, you know, I mean, everything was doom and gloom. The market was down 500 points one day, and then we had that strong reversal in that day. And, you know, gold during all of this really just hasn't done a whole lot. It just didn't make a move that you would think it would make with the markets acting the way they were. And that just kept telling me something. It was like, well, what is gold trying to tell us? Maybe that we're just overreacting, we're panicking, and maybe you know it's not as bad as it looks like it is, right? So I think gold is something that you want to continue to pay attention to. I don't think it's something that you want to try and get involved in unless the market completely rolls over and we break some new lows. Then I think you're going to see more fear start to come into place. If you've been in the chat room or if you've been, you know, following the blog, you know that the thing that we have been really paying attention to and being actively involved in was the volatility. And, you know, look, we could see continued volatility, but look, if the market starts to climb, if, you know, all of a sudden we get a bullish tone, you're going to see volatility come in. So it won't be as easy of a trade as it has been for the last several weeks. So be careful in the volatility space, okay? It has been our focus, but I think now you're going to have some opportunities to trade some individual stocks, some individual sectors where we should have some really nice action coming up. Now, next week, well, let's just take a real quick look at the indexes. You know, the Nasdaq. We talked about this last week, where we said it would be fairly simple to break through this short-term downtrend right here, right after this significant drop-off. It'd be fairly easy to break through, and then we have to start to try and decipher where we're going to have some resistance on the way back up. And, you know, this 4,600 area, round number, could serve as a resistance point. But, you know, we've got some huge earnings reports coming out next week. And that's what's going to make next week so exciting. We've got Apple. We've got Facebook. We've got Microsoft. We have Freeport-McMoRan. We've got Caterpillar. We've got some big, huge names reporting next week. Okay, this is like you know, a huge, huge week for earnings season next week, and it really could set the tone for how we trade over the next several weeks. Now, there are two ways that the markets or companies can approach earnings season. You know, you could be like Starbucks, who, you know, came out with a decent earnings report and gave soft guidance. Okay, and some people call that sandbagging, right? They give soft guidance. But there's a couple of reasons why companies may do that, right? Give soft guidance. It's to temper expectations, and if they, you know, another thing that they do too is if they have a stock buy program in place and they give tepid guidance, it gives them an opportunity to buy their stock on this pullback, right? You guys know how I focus a lot on insider buying and stock buyback programs. Those are big deals to me, and I understand that just because they announce a stock buyback program doesn't mean the day that they announce it that they're going to start buying back stock. What it means is they have a program in place, and anytime they find it opportunistic to buy the stock, they're going to. So if they give a soft earnings guidance and the market reacts initially by selling it off, what do? They buy some stock. So keep that in mind. You know, we've got some earnings coming out next week from Apple. Listen, if Apple reports a bad quarter and gives soft guidance, they have a stock buyback program in place. Guess what? They're probably going to buy some stock, right? So keep that in mind as we head into next week. And I think after the setup that we've had, you know, we had oil stop going down. We've got some big name companies coming out with earnings. Now, I know that last week it was a doom and gloom. We broke some long-term trend lines, and that was concerning to me, and that there had been a reversal in the way the stock market had been reacting. It was buy every dip, right? Well, now it's sell every rip. And next week could really define that for us. Let's go to the T2108 and T2107 real quick. We've been talking about these two indicators, and I was suggesting, look, down here, this is not the time that you want to start piling onto your shorts. This is the time you want to start covering, right? I mean, this is a daily. Let's go back to the weekly on the T2107. This is the percentage of stocks above the 200-day moving average. When we get into this area, it doesn't stay there very long. And if you look, every time it has gotten down here, it's had some pretty significant rallies off of these areas of support. Let's go back on the monthly on this one. You know, we're talking years. Not many times have we broken into these low areas. Okay? And if we do get I mean, look, to go from here to here, if you're in the market long, that's going to be, you're going to feel real good, right? That's going to be a really good, nice move in the market. And still, we could still be looking at a long-term trend reversal. Remember, bear markets sometimes give the most powerful rallies. I am not sold that the things that lie ahead, the presidential election, all the things that we talked about, you know, last week, I'm not sold that really any of those things have changed, okay? What's going on around the globe, you know, unemployment, I've said it and I'm going to stress it again. You know, you need to focus on unemployment. If we continue to see, or we start to see, tick ups in, you know, people filing unemployment claims and, you know, job losses, if you start seeing more and more companies announcing layoffs, if you see big high profile bankruptcies in the oil and gas industry, these are not positive things. They will hurt the markets over the long term, and we could be in the beginnings of a bear market. Your mind has to be open to that possibility. Does that mean that we can't have some extremely powerful rallies? No, it doesn't. And I think we're set up for one of those extremely powerful rallies over the next several weeks. So, and what's going to help us determine that? It's going to be the earnings that we're going to be getting next week. Now, what else is happening next week that could impact the markets, impact volatility? Well, the Fed. The Fed speaks on, you know, it starts on Tuesday. They give a statement on Wednesday, and that likely is going to impact the markets. You know, if they continue to be steadfast in the statement that they want to raise the rate 4 times this year, the market likely will react negatively to that statement with everything that's going on around the world. And hold on a second here. I'm going to put this on pause because this has frozen up. So let me put this on pause until I get the charts back. I'll be right back. Okay, I'm back. IWM. So, you know, let's just take a look at some of the indexes. You know, big concerns. We broke the long-term trend line. We broke the psychological 100. And we actually reclaimed that on Friday. Okay? Could IWM come down here into the 84 area? It could. Can we see a nice bounce and rally before that were to happen? Absolutely. That is possible. Look, I want you to think about, you know, we talk about longer term trend lines and how we ramp and accelerate from, you know, the gradual incline, right? We ramp and accelerate. It's no different than when you ramp and accelerate from a trend line to the downside, right? I mean, let's look at this for a minute. So here's our gradual decline, and then look what happens when we get this ramp down, right? You get a ramp down, and what happens? You get a snapback, or you get a reversion to the means, right? You kind of come back into, you pull back from this overreaction, okay? So it's the same thing here. If we look at how we ramped, we had an acceleration away from the trend line, and now we're going to get a snap or a pullback, right? Because we just got a little overdone here. So where can we pull back to? You know, if you look at the IWM, this 103.58 is actually a pretty interesting area because this is the long-term trend line. You have a point of reference here at 103. I think coming up into 103, we might see a little bit of resistance. If we slice through that, then we come up into this 107 area where we'll probably see a little bit more resistance. But, you know, the IWM could come all the way back up into this trend line and still remain in that short downward trend, right? So if we were to make this move from 100 to 116 and you're in small caps, you're going to be feeling pretty good about that move. But you can't take your eye off the fact that we could have a long-term trend reversal. Like, these things don't just all of a sudden, boom, it's over. You're going to get these bounces that suck people back in, that think, okay, we're back, everything's all good, we're back in the bull market. Look, we could have already had this new trend developing, but that doesn't mean you can't have some powerful snapbacks. So always keep that in mind. Let's take a look at the SMH. I thought the action in the SMH was fairly interesting. We had talked about the fact that there looked like there was a lot of distribution in the SMH. And then look at this here. All of a sudden, you had a nice amount of accumulation on above average volume, right? I mean, look back here. The volume was down in this area. Oops. Right? And then you had some above average volume on this accumulation. I mean, I think SMH is an interesting area to keep an eye on. S&P 500, you look at where we came down to. We came down to this on the daily. We came right down to this area of price support, right above 1800. We've had a nice little bounce back. We're testing the 1900 area. Looking at this I'm looking at this area as this little band of resistance between this 1908 and 1926. If we can take out 1926 with conviction, I think it's really doable to go back up and test 2000, that round psychological number. Let's take a look at energy. Coming back up into this trend line, but remember how we talked about the ramp of acceleration away from, right? Here's the ramp, and we had a nice little bounce, and we've got another accelerated ramp away from this trend line here. So it's very possible that we could come back up and test into this 60 area or 65. We could come all the way back up and test this trend line. That would be a very nice move in the energy sector. And there's going to be individual names within that sector that are going to have incredible moves. So XLF got an accelerated ramp as well. It was interesting. Financials, a lot of them reported. The reports were not all that bad. They were actually pretty darn good. Financials could not find their footing. And then we got the home building number, existing home sales on Friday, which was, set a record for December. I understand that there were reasons why those numbers carried over into December. Regardless, it was a nice number. Saw a nice bounce in the home builders, and you're likely going to see some continuation in that sector next week. Now, there are going to be areas of the country, like Houston or Texas, that aren't going to have probably real good home builder numbers, but I still think you're going to see some continuation within that sector. Retail had a little bit of a bounce, right, off of this area of support, price support. Let's take a look here. I mean, it did reclaim by the end of the week. So what I'm suggesting is that as we head into next week, do we look at the T2108, the stocks above their 40-day? I mean, this is big, right? We had a nice little bounce off this area. I am really leaning towards the next few weeks of being fairly positive in the market. I think we're going to get some great trading opportunities. I think you still need to be cautious of the long-term picture and where we might be heading, and the fact that we may have experienced a long-term reversal. But also, I talk about stocks and insider buys. Disney, some news that the CEO took a position in Disney, right? And look at where Disney had come down to. It came down, tested this price support right here to the T. I mean, kissed it. It has bounced, and now retesting this trend line. If it climbs back over 100, I mean, you're likely to have some resistance around the $100 mark. But then I think if it takes out 100, it could potentially come back up and test somewhere in 110 in that range. Nice move from where it's at. So, energy sector, snapback plays were my focus last week, and I had one stock in particular that I actually happened to take for a trade that worked out beautifully. There are still some stocks on that list that haven't had a snapback. I'm looking for that potentially to happen next week. I've got some stocks that I think are absolutely worth watching as we head into next week. I think there's going to be some great trading opportunities. I'll be going through my scans and putting together a list of stocks to watch for next week. And I'm probably going to be doing a ticker TV for tomorrow morning to go through some stocks to watch. And I'll post that. Probably what I'm looking at is about 7 or 8 o'clock tomorrow morning. If anybody's got a preference of time, hit me and I'll see what I can do. But 7 or 8 o'clock tomorrow morning, I'm going to do a live ticker TV and do some scans and go over people's requests of stocks to watch for next week. And understand that I am pretty darn positive for next week and looking for a pretty strong rebound. I think we're set up for a really nice rally in the market. So that's it. Positive for next week. Hope you have a wonderful weekend. Enjoy the rest of it in case you don't want to watch the Stocks to Watch video. And I will see you all next week.